So, I personally use this strategy almost every day because the market conditions for it occur very frequently. For this strategy, we'll need a chart with a clear trend, high volatility, and an indicator that shows trend strength, for example, ADX. Now, let me quickly explain the concept before we go into detailed examples. The core idea of this strategy is to open a trade in the direction of the trend, right when the price is preparing to continue its movement after a pause. Let's break it down step by step. We need a strong global trend, then a support or resistance level where the price pauses and forms a triangle pattern. Next, we wait for a breakout with a strong candle and a confirmation signal from the indicator that the trend will continue. Finally, we open a trade for at least half of the previous impulse length. Let's look at some real examples. So, on the 15-minute time frame, we start by looking at where the price is moving within today's session. In this case, we see a strong upward movement, meaning we're in a global uptrend. The best approach? Follow the trend. That means we'll be looking for buy long opportunities. Let's take a closer look at what's happening with the price right now and switch to the 1-minute time frame. At the very top of the trend, price reaches a resistance level and starts to slow down. This level is a key decision point. The market will either break through and continue upward or pull back temporarily. But here's something interesting. When we draw a local trend line, we see a triangle pattern forming. Now, a quick word on triangles. This is a classic trend continuation pattern. The price and volatility gradually squeeze between the trend line and resistance level, signaling that the market is building up energy for a strong move. The breakout usually happens in the direction of the global trend when volatility shifts from low to high. According to the triangle strategy, we enter a trade only after price breaks through the resistance level. In this case, we go long. So now we've combined basic knowledge into a full-fledged trading strategy. By the way, if you want to learn more about my strategies, money management, and everything you need to start trading with confidence, check out my Patreon or Telegram. I keep it updated with fresh content, and you can even join a live trading session with me and copy my trades. You'll find all links in the description. As you've probably guessed, this strategy is entirely based on the triangle pattern, and let me tell you right away, other continuation patterns won't work for this setup. The whole idea behind the triangle strategy is to find the moment when price is ready to continue moving after a pause. Let's break it down step by step. First, we analyze the global trend on a higher time frame, something like 15 to 60 minutes. If the price is clearly moving up, we only look for buy opportunities. Next, we switch to the 1-minute chart and wait for price to slow down near a key level, either support or resistance. When the price starts compressing between resistance and the trend line, that's our signal that the triangle pattern is forming. Volatility drops, candles get smaller. That's the market storing up energy for a breakout. Here's the most important part, waiting for the breakout. If price breaks through resistance and volatility spikes, that's our green light to enter a trade. To make sure this strategy works effectively, here are a few key rules to follow. First, global trend. We always trade in the direction of the trend. If the trend is up, we wait for an upward breakout. If it's down, we wait for a downward breakout. Second, triangle pattern. For a triangle to form, we need two key elements, a trend line and a support or resistance level. If the price is compressing within this range, the pattern is forming. Third, volatility shift. While the triangle is forming, volatility drops and price movement slows down. This is normal. But when the breakout happens, volatility should spike. If the breakout happens with a weak candle, it's better to wait for confirmation. Fourth, breakout confirmation. The breakout must be clear and strong. If price briefly breaks out and then snaps back inside, it could be a fake out. You can wait for a retest. If price comes back to the breakout level, test it, and then continues moving in the same direction. Fifth, choosing expiration time. If we're trading on a 1-minute chart, we set the expiration long enough for the price to move at least halfway through the previous impulse. Typically, this means 5 to 7 minutes. Let me know in the comments if you have any questions about this strategy. And now, let's move on to some real trades. At first, the chart showed a strong uptrend, but then we spotted a double top pattern, a reversal signal. The price then flipped into a downtrend and started moving lower with strong momentum, barely leaving room for corrections. It eventually reached a major support level, paused briefly, then broke through and kept falling. When I draw a local trend line, I see the triangle pattern forming. The price is compressing within the pattern, signaling lower volatility before the next move. Now, the key question is, which way will the breakout happen? If price breaks upward against the trend, that wouldn't fit our strategy. In that case, the better move would be to wait for price to reach the next resistance level and look for a short trade after a pullback. In this situation, everything worked out perfectly according to the strategy. The support level broke, confirming the downtrend continuation. I opened a short trade for 8 minutes because the triangle was relatively small, meaning there was a chance of a quick retest. If there was another support level below, I would have increased my expiration time to 15 minutes in case price stalled or bounced. But since the area below was clear, 8 minutes was enough. For extra confirmation, I used trend strength indicators like the moving average, RSI, and in this case, ADX. The red line was at high levels, confirming a strong downtrend, a great sign that the price was likely to continue falling. And that's exactly what happened. Price first retested, but thanks to the proper expiration time, the trade closed in profit. Everything followed the plan. Trend, pattern, breakout, confirmation. This step-by-step analysis is what makes strategies like this work. If you found this video helpful, smash that like button and subscribe. It really helps my channel grow. I'd really appreciate your support, and if you have any questions about this strategy, drop them in the comments.